What is up, everybody? Spektrades back here. In this video, we're going over stop hunt / liquidity sweep. Before we get started on the video, make sure to give me a follow on Instagram at Spektrades. This is where I am most active at. If you have any questions, make sure to give me a DM on Instagram at Spektrades. Let's hop back in the video. So what is a stop hunt? A stop hunt is the process where institutions and market makers purposely move prices to trigger retail buy stops and or sell stops, faking out traders before moving in the intended direction. So right here we see that price was building up liquidity in this consolidation zone. Retail buy stops or sell stops is resting above up here, right? So liquidity is hiding above the old highs and the old lows. So price will then come up, give us a liquidity sweep of these old highs right here. So this is our stop hunt, clearing out all the stop losses that is hiding above these old highs right here before going into direction, right? So these early traders right here, they probably had the correct direction. They probably wanted to sell, but price had to come in and then take them out first and manipulate them before going to lower prices. So as you can see here, the price will take out your stop loss, turning you into liquidity before reversing and moving in the right direction. It continues the movement without you, leading you to chase price. This creates FOMO, making you feel greedy and scared, prompting you to jump back in the market and causing you to lose even more. So after price usually take out the traders, right? Take out these early sellers and then start moving lower. Some of the sellers, right, they feel like the move will just continue to just drop. So then they will come and just place their trade without a proper stop loss. And then price usually comes back, takes them out again for a continuation stop loss now, right? Takes them out again before going back even lower. For us personally, this is where we will be entering, right? So after price give us a break of structure, we know a lot more traders will have FOMO or fear of missing out. They will jump right back in, trying to be right with the trend. But for us, we'll just be waiting for price to come pull back, clearing them before going to lower prices. So stop hunts or the manipulation phase in the market, they are a part of what ICT calls the power of three. First, price accumulates orders and builds up liquidity before the Asian session. Then during the London session, this is where our manipulation happens, right? Many traders get stopped out before continuing during the New York session. However, stop hunts are not just during the London session. They occur anywhere price is consolidating or accumulating orders, right? So it's not just during the sessions. I would say it's mainly just anywhere you see price maybe just building up liquidity. Just know that price will then come up, sweep the liquidity before going to lower prices. So as we can see here, this is what ICT calls the power of three. First, price will then accumulate orders and then stopping orders, right? Manipulating early sellers or early buyers in a buy format before going to lower prices and distributing. So this is our power of three, and the stop hunt is the manipulation phase right here, right? This is our stop hunt. So when do stop hunts happen? Stop hunts happen during reversals or continuations, wherever the algorithm makes sense that stop losses are being built up at. So some key areas include consolidation zones, old highs or old lows, relatively equal highs and lows, and they occur during sessions such as London and New York sessions before every big price swing, right? So before price correctly move to the correct side, price will usually always do a stop hunt, especially after price has accumulated orders. After accumulating orders, price will then perform a stop hunt and then try to distribute after faking out the traders. So after price fake out the traders, then price will move down to the correct move. So right here is just some simple schematics. As we can see, this was the one we previously seen before. Price will just be building up liquidity, and then price will just stop hunting. A lot of stop losses are hiding above these right here. So the algorithm will come sweep them up before going lower. Just remove this, and then right here is our continuation stop hunt, right? So price will just be creating higher highs and higher lows, giving us consistent break of structure. But after every break of structure is like a short-term high. Price will then come down lower, purge them, because people will be hiding their stop losses below here because they think that now that price is give them a break of structure, that this low right here is strong, right? So people will be hiding their stop losses below these old lows right here. So price will then come back lower, purge through them, clearing their stop losses before continuing higher, right? So this is our continuation stop hunt. Remove this, And then right here we have our double tops or double bottoms, right? So as we can see here, price is just creating relatively equal lows. So the lows might just be relatively equal, so price will just purge them lower before going higher. And then it's the same thing for the highs, right? Price is just creating relatively equal highs. Price is just gonna purge them higher and then just like go lower, right? So double bottoms or double tops or key areas, right, where we might see a stop line happen. And then right here is just a type of continuation, right? Type of consolidation continuation stop line, where price is just accumulating orders, boom, purging them lower before going higher, and then accumulating orders again, purging them lower before going higher, right? So these are like the key areas that we might see a stop line, right? And they are happening on all time frames. It's not just during the sessions. It happens all the time on every time frame. But this is mainly like our main strategy, right? We wait for price to give us our the stop line and then give us a breakup structure, and then we correctly align ourselves before we distribute lower. Now, retail traders are not stupid or bad as they often portrayed, right? Because like a lot of people might say the retail traders are stupid or they're just like not good at trading, but like they're not really bad at all. In fact, retail traders have a understanding of where price will go, right? Some retail traders, they know that price will sell or buy, right? They're just in the markets way too early, I would say, right? Their timing is bad and they're just anticipating to sell way too early, right? They're just trying to get in a trade, right? And because, right, they are way too fast and trying to get in a trade, they usually have like a 50 pip stop loss. And a lot of retail traders, they are in heavy drawdown, I would say, before price reverses and go correctly, right? You might see this with a lot of traders that trade trend lines or just any type of retail strategy, right? They are in a heavy drawdown before price correctly moves, right? So our main job is to determine where price is accumulating orders, anticipating the manipulation, and then aligning ourselves correctly with the distribution phase to place our entry and head toward our targets. So for our simple strategy, first we'll observe and see where price will be accumulating orders, right? So as we can see here, just like I state, we may see price accumulating orders during consolidation zones, double tops or double bottoms, during continuation settings, right, where price is just continuing higher, an old low or a old high, or when price is just consolidating right here, right, and just going higher and then consolidating more. We may expect for those lows or highs to just come back lower to just go higher. So that is number one. So secondly, we wait for price to give us a stop line / liquidity sweep. We wait for price to come in and clear the liquidity that is accumulating before we go enter our trade, right? So that's the second step to our strategy. We wait for price to give us a stop hunt or a liquidity sweep, right? / liquidity sweep. It's basically the same thing. And then third, we wait for price to give us a breakup structure. After every stop hunt, we can expect for price to come back lower or higher and give us a breakup structure before giving us a slight pullback for us to enter on before we go to the correct direction. For the fourth point, we'll pick our point of interest in a premium zone for sales and in a discount zone for buys. So as we can see here, let's go over some live charts. We see that orders is getting built up around this right here, right? You see all these highs right here is just consolidating. Prices is just consolidating, building up orders. Early sellers right here just placing their stop losses above these old highs. Price come up, stopping them out, clearing these old highs, boom. And then price goes lower and give us a breakup structure. For us, after this breakup structure, we'll grab our Fibonacci and mark out the 50% and wait for price to come in premium zone and pick a point of interest inside of premium zone before we go for lower prices. Make sure you watch my video on discount and premium, where I go over what exactly is discount and premium and just how you use that personal strategy. So for us, we will enter at a fair value gap and catch the real move. So a lot of traders, right, they got stopped out right here. Even though they thought price would just keep selling, price came back up, stopping them out, and then came back lower, right? A lot of traders might start jumping in right here, right, placing their stop loss above these old highs right here, thinking after this breakup structure happened, placing their stop loss above these old highs right here, thinking that price would just keep going lower. But for us, we would wait for price to clear it, these internal range highs, tap into our fair value gap. We will place our stop loss above the old high right here, right? Stop loss at high, and then we wait for the real move. This is just a game of patience right here. A lot of these retail traders, they are not patient. That's why price comes in stopping them out before going lower. Right here is another type of stop hunt, right? So right here we see that liquidity is being built up right here, right? A lot of old lows is being built up, right? And then price come right here and clear these old lows and give us a fake break of structure. But we see that all these lows right here is just getting built up. It's like a consolidation low, right? Just getting built up. But a lot of traders will see this right here as liquidity sweep and this as a break of structure. But right here is a fake break of structure. And then a lot of traders will place their trade right here. We see they will see this fair value gap as a form. Price will come back lower. They had good intentions, I would say. They had good intentions for price to go higher, but they were just too early. What happened? Price just purged through them. This is our stop hunt, clearing these old lows, boom, and then goes and gives us a break of structure. Now after this break of structure, we can expect a slight pullback, mitigation block right here since price failed to go lower. So price right here use this mitigation block before going higher. This is our real move. So we'll wait for price to accumulate orders. That's number one, and then come and give us a stop hunt, clearing these old lows. That's number two, and then go up, giving us a break of structure. That's number three, to then come back and give us a slight pullback and tap into our discount or premium zone, right? So right here is in a buy format. So this is our discount zone before going to higher prices. So this is another chart. And then right here is the same type of format, right? So we see that price comes and give us a break of structure. This is like a continuation type setting, right? Just like we explained in the schematic. So we see that price give us a break of structure, and then this low right here came and gave us another break of structure. But this is like a fake break of structure. This is just price coming back after this break of structure, giving a slight pullback. There's liquidity hiding below here, right? So a lot of retail traders place their stop losses right below this low. So as we can see, price comes back down, taps into it, right? So they're probably thinking that price will just keep going long, right? So their stop losses are hiding below these old lows. But what does price do? Around 3 a.m. London kill zone, price stops on early retail buyers. So as we can see, price push lower, taps into this order block right here before going higher. After the stop hunted early retail buyers, price will then correctly move to the upside and distribute. So as you can see here, price purge lower, clearing them, boom, stop losses, clearing those stop losses before going higher. And now for our last chart format, we can see this right here. Price is just giving us a break of structure right here. Price came back, building up liquidity, boom. So a lot of traders are thinking that this right here is the correct move right here. As we can see, a lot of traders will place their stop losses below this old low, but price came back lower, purged them, giving us our stop hunt, boom. That's number one. So number one is just price is just building up liquidity. As we can see, all these old lows right here, we can expect for them to get taken out, boom. So price was just building up liquidity inside of this range. Price will then come and give us a liquidity sweep. That's number two. That's our stop hunt, and then give us a break of structure. And after that break of structure, we can then expect for price to come back into the discount zone, right? To fill in this fair value gap and tap into this IPA to then go for higher prices. So a stop hunt is basically just price manipulating orders and just taking out early buyers or early sellers in a trade, right? So with this correct knowledge now, you can go on your charts and mark out your own charts and just see it for yourself. If you guys want more in-depth truth and just a more explanation on just all these concepts, I have released a free course in the link below. Make sure you click the link below for the free course. It's free. I explain all the concepts, fair value gaps, and just everything, order blocks, IPAs, and I have a good top-down analysis lesson on there if you guys want more top-down analysis approach, right? So the link below for the free course. So that'd be it. I hope you guys enjoyed the video. Make sure to like, subscribe, and comment what you think. Spektrades out.